Good morning, traders. It's Friday, February the 7th. Taking a look at the charts, a little bit of price action swinging around today. The equities markets are pulling back. Obviously, they've had a massive 4-day run. Yesterday, pulled back a little bit. Today, they're pulling back a little bit more, down about 0.3%. But overall, if you look at the price action of the SP 500 and we zoom out to some previous type of market action, you can see we're in this type of price action right here, where we've had a corrective phase, a little ABC correction, panic selling, and then this strong impulse move. The strong impulse move is equivalent to one of these types of plays here, where the market rebounds, it consolidates for a little bit, one of these or one of these. Again, one of these. This type of move, the strength that we've had is very similar to something like this or this one over here, where you can just get this really strong move. It needs to digest that for a little bit. It's broken through this previous high. It's kind of consolidating, and that's where I think we're at here. We've had a big move. It's broken through that high. It's going to consolidate through here, and it might pull back a little bit, but overall the bias is to the upside again, and money is flowing back in to the equities in a pretty big way. Now, if we take a look over at bonds, stocks are down slightly today. They're overbought, so people are moving to bonds. Bonds did move higher yesterday. If we look at today's price action, we're trading higher again, up about 0.5%. And we're flirting with this 5-day moving average. It came up above it this morning. If I zoom in a bit here, you can see this candle wick came up above it, sold back down below the 5-day. And we talked about this with our short-term chart here. Here are bonds. We got into this oversold territory down here over the last 2 trading sessions. Cycles were bottoming out. I pointed an arrow yesterday saying, we're looking at higher prices for a couple days, and that's where we are. We're set the gap higher today. We're going to have a nice little bounce in bonds. It might be actually a level where we start to move out of some more of our position, lock in a little bit more gains or close it out. I'll see how the market moves today, but overall everything's moving kind of where we thought. Gold and miners were oversold. They've started a nice bounce. They're set to open flat today, but bonds are continuing to move up and actually play a little more catch up with what the gold miners did in terms of the same percentage move. Now, equities overextended to the upside. We're up at this near this red hashtag. It popped up and moved higher yesterday, but overall we are trading in this overbought territory all day yesterday, and today we're starting to see a little bit of a pullback, which is totally expected. Our cycles are topping out. We're overbought, so a pause or pullback. And if we just squeeze this chart down a bit, you can see it's perfectly normal to have a strong, massive strong rally, overbought, cycle topping out, and we broke this high here. So I wouldn't be surprised if the market consolidates and pulls back a little bit before potentially popping and going higher. And of course, if it does pop and go higher, we could see metals and miners consolidate, trade in this bigger range. I think we could see bonds potentially fizzle down a little bit more, but overall, there's still a lot of fear that the market's overdone and is going to start to pull back. And that's why we're seeing bonds move up today, and bonds may end up holding their ground fairly well. So we'll see how we play out here over the next session or so. We may start to move some of our bond position out again, sell another quarter position as the market kind of rotates higher after it's very close to rolling over and starting a downtrend here. And of course, the equities are very close to consolidating and having a much bigger run to the upside. Let's go back to the charts. Take a look over at gold. Gold is trading relatively flat on the session. Not a whole lot going on. It's getting close to a little bit of a bow tie, meaning the 20-day and the 5-day moving average are about to cross. Overall, it's trading at both of those, and we'll see if it can hold support longer term and continue to trade sideways and build this what looks to be a large pennant formation. If we were to just zoom out on this chart a little bit, that's about it for there. But if we zoom out and just draw here, we've got a potential pennant formation. We could see this continue to consolidate and eventually start to break above here and start a run. And that would be our ideal setup. We don't really want to see it A, B, C correction. Something to break this across here would flush the market out. It would actually still be a very bullish sign, but it means we've got to take on some heat and be underwater in a position more than really we want to be. There will be a pretty critical support zone somewhere around this area. You can see how price popped and then consolidated through here for a few days before really expanding again and taking off. So this would be the level where we break this low, we flush down 15, 20, could act as a very strong support level, but we are hoping for this pennant formation and a continuation going higher. Looking over at silver, down 0.6% this morning. Again, it's getting pretty gnarly. It's got some big down days, up days, down days. It's kind of chopping around. It's making kind of a weird formation. You could argue it's a little bit of a diamond formation. Depending on how you see the market, this can be seen as a very strong pattern diamond formations, but really to me it is a lot of noise. It's the bulls and bears struggling. It means more or less this range right through here. If we were to just draw this range that the diamond is forming, this volatility in price, means it's a major turning point. And the question is, the market's either going to break to the downside in a big way or it's going to rally. But right now there's a lot of volume trading through here, big positions swinging around, loading, unloading positions, and the question is which way is it going to break. And obviously you can see these bars here, huge up days and down days back to back. There's a lot of volume going through here. So this is all noise. This is a significant level. If we were to step back and look at the big picture, it has had a nice run up. It is consolidating in a bull flag. If it can get its act together and get some traction here, we could start to see big short squeeze and potentially a big run to the upside, silver and miners. And as you know, long term, I think silver and the silver miners have got a ton of potential, even more than the gold miners. But they're not really breaking out just yet. They're not as bullish as the gold miners at this point. Looking over at energies, natural gas down 0.75%, still flagging sideways here. Overall, we're still hanging on by a thread with our UNG position. It's going to open still above our price, but overall our stop price. But at any point here, we're going to see it pop or drop, and we're either going to get stopped out or we're going to start to get into the money very quickly. And it really is just a waiting game at this point. Looking at crude oil, down 0.75% as well. It's got this increased volatility as we test these lows right through here. Kind of broke down, had a rebound. It's selling back down, so we're getting some noise and choppiness in here, very similar to what we see during usually long-term support zones. Here we had the market sell off. It had a strong bounce. It sold back off, had a strong bounce, and that's more or less what we are doing here. The market is sold off. It's had a strong bounce. It's selling back down. It could chop around here for a little bit and form a little bit of a bear flag or a base. Whichever way it breaks, I think is going to have a very strong run to the upside or a very strong drop to the downside. Last but not least, let's just quickly pull up Bitcoin. Or sorry, not Bitcoin, the US dollar index. The dollar up again yesterday. Gold and silver and miners were up yesterday, so they are moving up together. And of course, yesterday I pointed this out that if the dollar does start to fade back down when it's got this potential topping pattern, we're far from it topping still. But if it does break this, you could argue here we got a shoulder, we've got a head, we've got another shoulder. If it comes down and starts to break this level, this would be a very significant opportunity for gold miners. Really, if the dollar was to collapse and get back down to this level, just this fall down here should spark a big rally in metals, but a breakdown here would be very significant because it means the dollar is now in a downtrend, and falling dollar means rising commodity prices. So we'll see how that plays out going forward. But right now, the dollar continues to bounce up. It's still working its way up to this upper resistance area, this falling trend line. It's got some more room to go, and it is long-term still in a uptrend. You can see here we have a rally, a pullback, a rally, a pullback, a rally, a pullback, a rally, a pullback. Now this pullback was a lot deeper than all of these in terms of these ones always had a nice step higher This time it's come right back down to test this previous step. So this feels more like a topping phase, that this is a dead cat bounce. This is just more, this is a bounce, not so much a rally. And this could fizzle back out and then totally collapse. And that's the type of price action we saw over here as well. You have a strong rally, a pullback, and then things start to look bearish, and then you have the breakdown. So this move that we're seeing in the dollar right here, this breakdown and bounce feels a lot like this over here. You notice we had a pivot low here. The market came down, it actually pierced through there, but it had a very strong bounce, and then it came back down, tested that level with some lower lows, but eventually broke down. And that's what I think we could be getting into here. And of course, a falling dollar should help commodities, specifically precious metals. Last but not least, let's take a quick look over at Bitcoin. Bitcoin had a huge bull flag. It's been consolidating, and now it's back up in rally mode. Looking at this price action, you can see here we've got this resistance area right across here, which is a whole number. It is 10,000. Whole numbers tend to act as support or resistance depending on which side you're on. We are underneath it, which means people who are in Bitcoin say, when it gets to 10,000, I am cashing out. Get me out of this roller coaster ride. But overall, if we were to look at this price action and throw a Fibonacci extension, we can get a target on here of the upside. Let's grab the target. We can go down from these lows. I'm going to grab this low here, go up to where at least two highs more or less tagged, and then come down here to where at least two lows tagged, carry it forward, and we'll crunch the price down to see where it goes. You can see the next upside, the two upside targets here would be a move to the 618, which is 12,800. If we have a hiccup and pull back at that point, we almost always see that 100% level hit next, which is 16,005. So those are the upside targets. Obviously, we've got to break through this resistance area here. And for all you know, Bitcoin could chop sideways, could pull back. This could be a long-term basing formation, or it could just blast through it. Bitcoin has this tendency of having these big one-day pops where you have a 10 or 15 or 20% gap or pop that happens almost instantly. A lot like what gold does sometimes. It just, in silver, they just pop, and really hard to catch. You got to be in place for them. But overall, it's trading at resistance, but it's in this bottoming phase here and could be starting a breakout to that 12.8 and then 16.6 going forward. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.